Hello, traders. Just entering the trade at 25834, buying the Dow Jones. That order is now filled. All right, so I'm now in this trade. Bought the Dow Jones just now at 25834. I'm going to use, let's see here, stop loss. Yeah, stop loss should be somewhere just there. I will use 17 pips. All right, just leaving it there. That's the stop loss. Very conservative stop loss. 25817. Bear with me, please. Hold on, please. Traders. 25817. Okay, that's 17 pips for that trade. Now, I want to explain to you what we are doing here. This is speculative Elliott wave count. We have here an inverted head and shoulder chart pattern. So price going down, going down, going down. Now it exhibits an inverted head and shoulder chart pattern following our Elliott wave count guideline from 2-4 Elliott wave. This is the first wave from here all the way up there. That's the first wave. This is the second wave. We have a very slanted inverted head and shoulder chart pattern. Normally should be horizontal, the neckline, but here it's a little bit okay, declining. So this is the second wave trying to retest the top of the neckline, and now we have the third wave all the way up there, and the fourth wave. This is the third wave. The fourth wave is a triangle. Now, very often when I draw my triangle like this, some traders disagree because what I do, I need a three price move: one bringing it up, one coming down, and one going up. Okay, that's it. One going up, one going down, one going up. I have my triangle drawn already, this one. So as you can see, normally when people are selling here, their target, those that are selling here, their target is somewhere here. So I'm asking a question: why the price is now finding a support, or why the price is validating this level of 25817 at a support as a support level? If we quickly go to the hourly time frame to investigate what is happening there, here it is. That level where the price now, we are here now. You see, it was a support here on the hourly time frame. That's why we have that long candlestick bar. What has happened before is likely to happen. We may end up, maybe not today, or few days later, to see another long candlestick bar in that session. Again here, it was a support again, the same level was a support. So on the hourly time frame, it was a support level. Okay, now the same level we are now, and after the price came out of that triangle on a 3-minute time frame, it couldn't go below it again, the same red line here. For those reasons, I took that trend using 17 pips. So my expectation, you see, normally we were expecting the fourth wave to end here, but they push it down. So now we put our fourth wave here. This is a speculative Elliott wave count. For traders that are very new to the topic of speculative Elliott wave count, is when one who knows about the Elliott wave rules decided to use the Elliott wave rule in a speculative fashion in view to make day and swing trading decision to improve market timing, especially on the lower time frame when one is day trading or scalping trade on the lower time frame. In that case, one is not counting wave as such, but one is relying on price move. If you want to learn more, go to 2-4 Elliott waves, all right, YouTube channel. Check out our playlist about speculative Elliott wave count. All right, so you do not end up criticizing what we are doing here. It's something that we have come up with new. All right, so working with the Elliott wave principle in a speculative fashion. So price went down, okay, from an inverted hand shoulder pattern. So I need to mention something very fast. What I say to traders this, all right? When you are trading, you need to think of other traders. What is going through the mind of other traders, going into the mind of other traders. So though I counted my wave like this, you see, first wave, second wave, third wave, fourth wave, expecting a fifth wave to go up there, all right? There are other traders who are a little bit doing things a little bit different. So for those traders, some of them, we say, George, you didn't see this is the right hand side shoulder. This is not the right hand side. So those traders will say, this is the left hand side shoulder. This is the right hand side shoulder. So for those traders, they're going to say first wave, and they're going to say second wave. All right, and then they're going to say third wave. All right, or even some of them will say this. They will say this third wave, and they will say fourth wave. All right, this is what's going on. In fact, now, and they are seeing it at this. They say fifth wave right there. Now, I disagree, but I'm not going to criticize them. It's their wave count, okay? Elliott wave trader always disagree. So they say first wave, second wave, third wave, fourth wave, fifth wave, all right? Now, as they have done it like this, you can see that if you compare my wave count with this one, we got the same fifth wave correction, all right? The only difference, all right? No, this is, this is, I will talk about it. This is the fifth minor wave of my third wave. Their fifth wave, all right, is the fifth minor wave of my third wave. That's the only difference, all right? So those traders, they are the one controlling the price. So they see this, now they say 1, 2, 3, 4, 5. Now they say this is a flat correction, Joe. 1, 2, 3. A minor wave of the flat correction. They say 1, 2, 3. That's the B wave of the flat correction, and they had to say is around the C minor wave or the flat correction. So they say, George, for those traders, this is their correction taking place now on this 3-minute time frame, talking about speculative Elliott wave count. I need to say that all the time so traders understand what we are doing. Speculative Elliott wave count. They will say, okay, George, that multi-wave has ended here. Now we have a flat correction. You see, so their flat correction is ending here, and they want to buy. Okay, so they will be saying, all right, George, here it comes. 1, 2, 3, 4, 5. That's what you said yourself. Say, okay, first wave of a higher degree. Okay, first wave of higher degree. So they put it there. All right, that's it. All right, so they will say now that flat correction, George, that's the second wave of a higher degree. Are you getting it now? All right. Okay, so this is what's going through their mind now. All right, so they will be prepared to buy here as I'm buying also here. But so the difference between their wave count and mine is that what they are calling the correction of their multi-wave is what? My fourth wave. You see the difference? And also their fifth wave is the fifth minor wave of my third wave. So no big difference, all right? And we will see, okay? We will see. So now this is my fourth wave right there. And I'm moving this away, far away, somewhere here. Okay, so this is my third wave right there. While my fifth wave is somewhere up there, okay? Going up higher will be higher than that. But if I push it higher, you won't see. Okay, that's it. So this one, I do not need it here because I will be putting it that my 1, 2, 3, 4, 5 will be somewhere up there. If they allow the price to go up today, because you see, this is what we are talking about it. If you are trading on Friday, okay, give yourself the first 1 hour and 30 minutes, and that's it for scalping and day trading. If you're looking for better results, that's it. If you are trading after that, know that you are trading a gap period. Most traders will go for weekend, and a lot of traders come after 1 hour, 30 minutes of Friday only to lose the whole day. I mean, don't lose on Friday afternoon. Don't lose when New York is open. 1 hour, 30 minutes. If you are day trading, scalping, and go away. That's it. But if you decide to hang around, like I'm doing now, okay, know exactly what you are doing. Control the risk, take minimum risk, all right, and control it. Be very, very defensive. All right, that's it. So we go into the mind of other trader already. You see now, okay. So we are expecting the fifth wave. How do we forecast the end of the fifth wave? There are many ways that we forecast, okay, the fifth wave. So you can check the playlist about a fifth wave trading at the 2-4 idiot wave. All right. So one way to forecast the end of the fifth wave is to connect, okay, the high. My first wave there, my second wave there, is to connect the high of the first and the third wave and draw a trend line there. So we see that's the trend line here, that's the trend line there, okay, that's trend line here from here, blah, 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 blah. The high, so you leave it there. So if the price going up more, it's coming near that trend line, we'll be watching it. Does not mean that the fifth wave will definitely end there. Sometimes it would stop exactly there. That's one way. The second way to forecast the end of the fifth wave is to use either the length or the magnitude of the first wave. So when we are talking about the magnitude or the amplitude of the first wave, we go from the top high of the first wave to the low. We draw a vertical line like this, and we project it at the end of the fourth wave like this. Right there. So the target is somewhere up there. Okay? You can't see it, but it's somewhere up there. This same thing for you can also use the length of the first wave. So you draw the line through the first wave like this. That is about the length. Right? Let's move on. You can check that playlist. Here it is. And also you put it there. So you have there's a target up there. There's a room for it. There's a place higher than that. Okay? Now, because today is Friday afternoon, which I mentioned 100 times already, the price may not hit that level. As I mentioned to traders yesterday, when you're doing speculative Elliott account, very often there's no continuation from the day before and the day after. Right? The day before, the day after, the day before, and the next day, which means while you have done the day before, the price may not continue to follow it through the following day. That's it. Okay, because we don't want this video to be too long today, isn't it? So I'm not going to repeat myself because I've done it in the first two videos. So we're moving faster. Another way to forecast the end of the fifth wave is to use the Andrew pitchfork tool. Here it comes. Boom. You put it at the low of the second wave, at the high of the third wave, and at the low of the fourth wave. That's it. That can also be helpful for us. So you're going up, boom, 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 boom. Watch out for the median line of that pitchfork tool. If it goes above the median line of the pitchfork tool, watch out for the top of the pitchfork tool. That's it. If that pitchfork tool that you have drawn now, connecting the low of the second wave, the high of the third wave, and the low of the fourth wave, if that pitchfork tool is not useful to you, all right, you can use, okay, another pitchfork tool, which is from the low of the first wave. Now we use the high of the first wave and we use the low of the second wave. So we will rely on this one. If the price goes above the first pitchfork tool or the price is away from that first pitchfork tool, we can try to see whether this pitchfork tool will be useful to us. So those are different ways the trader try to figure out how far, okay, the fifth wave will go. But there is another way that we can also forecast the end of the fifth wave. All right, it's about using Fibonacci extension of what? Fibonacci extension of the last leg, the last segment. Can I use another word? The last price action, okay, of the third wave. So I always tell you the third wave is coming from here all the way up. What is the last segment? Most traders will say that this is the last segment. You pull back here, that's a last segment of the third wave. So they can apply Fibonacci extension to this segment and they will highlight the 138.2% Fibonacci extension level of that last segment of the third wave from here to here. But what you can do, highlight the 138.2% and the 161.8% level. Between those two Fibonacci extension level, the fifth wave can end there also sometime. So all we are doing, you understand? There are things that are working and we want to use them. That's what we are doing now. So we are not assuming that the fifth wave will definitely stop at one of those key levels, but it can stop there. Another thing, any impulse wave can be extended, especially the fifth wave can be extended, the third wave can be extended. All right? So when the fourth wave is prolonged, so on the 3-minute time frame, we can see that our fourth wave here is prolonged. So some trader will say the fifth wave has a high chance to be extended. Has a high chance. You want to adopt the mindset of professional Elliott wave trader, start speaking a language, not to say those were like a guarantee, definitely. It's not part of the professional Elliott wave traders. Or when we use word like accurate Elliott wave forecast, it means that we have done our Elliott wave count correctly by the book. Okay, accurate Elliott wave forecast. We have done the Elliott wave forecast following our guidelines accurately. The expectation is this, but be aware that the price can bring something else out. Flow with the price and do not assume anything. See the trading setup and then implement a top-down trading method. All right, sometimes when I'm speaking like this, they say, George, you are patronizing people. I think it's better to tell people the truth instead of fooling people. All right. Okay. There's also traders can apply Fibonacci extension to the last segment of this third wave. But in this case, so you do that also. Okay. But what we are looking at here, the last segment of this third wave is in fact from here, okay, to here. So you may say, why? Did you ask that question? It's good to ask that question, like the children, they always ask, why, daddy, why, mommy? Children want to understand. So it's a good question. So why? Because my third wave is subdivided into 5 minor waves. So this is the first minor wave of my third wave, the second minor wave of my third wave, and this is the third minor wave of my third wave, and this is the fourth minor wave of my third wave, and this is the fifth minor wave of my third wave. So because I can see, it is clear to me, the fifth minor wave of the third wave, talking about the last segment of that third wave, it is the fifth minor wave of the third wave. But when you can see, sometimes it's not possible to see all the internal wave of the third wave. When you can see the internal wave of the third wave, use the fifth minor wave of the third wave, apply Fibonacci extension to it, highlight the zone between the 138.2% and the 161.8% level. But don't ignore other traders because they can mess up your trade, because some traders will do it like this also, so you may know which level those traders are watching. As I said to a trader yesterday in the comment section, asking me excellent question, I said to that trader that, okay, you do not want to be, okay, the purest Elliott wave trader. So what is happening here? We are talking about Elliott wave. I said to trader, do not ignore everything that you will have learned, talking about divergence, market geometry, Fibonacci pattern, everything that you know before. When you are applying the Elliott wave principle, whether like a speculative professional Elliott wave trader or like an ordinary Elliott wave trader, always combine it with any other trading method that you know before. So as I was telling you before about this type of trader that see this as an inverted head and shoulder chart pattern like this, the head, the left hand side shoulder, the right hand side shoulder, their neckline is this one here. So those traders, they will use this measuring stick from the top to the low of this inverted head and shoulder chart pattern. They project it up like this. Are you getting now? There was a target there. You can see that as the price reached the level of Where were we? If you apply Fibonacci extension to my first wave, the 161.8% is somewhere here, this one. I've done it before, I'm not doing it again. All right. So you can see that as the price came to that zone, they push it through it because they know that 161.8% is a breakout Fibonacci level. But if the price hang around there for a while, it's slowing there, the bearish trader will try to sell it there to create what we call the negative signal. All right? If there is no breakout, it will become the negation of a breakout, which is a sell. So for those reasons, they push it through that level very fast. And you can see what they were trying to do. We are talking about this inverted head and shoulder chart pattern. Though you are counting wave, you should be able to understand what's going on here, this gap, and the price stopping near the target level because of this price target here. So you see now, that's why I'm saying to you, don't forget everything that you. So they sold it, they took profit. The person who pushed it, they say, we don't want to delay the price here. We don't want to invite the bearish trader. Bring it very close to the target and they take their first profit. As you can see, other traders who didn't come out here, they were lucky. Price came back again to the same target level and they came out. Now that the price goes above it, and we are talking about the target for the fifth wave, those traders that are paying attention to the chart pattern and the market geometry will now push it up again like this. So again, there will be an ultimate target far up there, and there will be a midpoint target far up there. So when we are talking about the end of the fifth wave, if they allow it to happen to them, all right, it's either the midpoint or the ultimate target of that measuring stick. As I said it before, okay, it's Friday. We are expecting a fifth wave, all right? It may not happen because why? Traders are no more than professional traders went for weekend, and the price may hang around here and may continue to oscillate or even come back down all the way here. And you may be wondering and say, what was he talking about? Where is that fifth wave? That fifth wave does not have to happen today, all right? And because of the market environment, and I'm aware of it. I'm aware of it. Price may go blah, 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 blah. You see, oh, this forecast is useless. But as we are speaking today, this forecast, according to everything that we know about the Elliott wave principle, is valid, is accurate Elliott wave forecast. We expect a fifth wave. But because this, don't forget the market environment. So if one day you are using Elliott wave service, Elliott wave forecast services, be aware of the market environment. Why sometimes people will say that this thing will happen and sometimes it doesn't happen. It's not because the Elliott wave forecast is not because the Elliott wave forecast is not accurate, but it can be the market environment. So suppose somebody forecasting a third wave here, all right, and now out of the blue there came out a negative news or a very bearish news, and everybody's selling like a donkey running around. What will happen? You will see that third wave. Does it mean that the Elliott wave forecast was not accurate? So there are external factors that can affect the Elliott wave forecast, but it doesn't invalidate the Elliott wave forecast. So those are the things. If you are an Elliott wave trader or somebody using Elliott wave services, you need to be aware of those things, and I'm aware of it. Okay. So here we are. In exactly the time in London is 12 minutes past 8. All right, so here it is. In exactly 48 minutes, that will be the end of this week. All right, end of this week, and probably there are few traders trading there, professional. Okay, are somewhere, probably enjoying themselves, and the price. You see how it's slowing there, blah blah blah. Okay, if it was during the first 2 hours, you see how the price. Today, this is it. Okay, 16. You see, price run fast, yes or no? Blah blah blah. Shh. That's it. From this point onward, from 11. You see, 11? Yeah. So New York will open at 9:30. You see, that's what I'm saying. Exactly 1 hour, 30 minutes later, you see how what's happened? Exactly, that's what I'm saying to you. Friday, okay? 1 hour, 30 minutes. You see that? Exactly 11 a.m. 9:30 to 11 a.m. That's it, finished. All right? That's it. All right. New York Eastern time. Okay, that's Eastern time. 9:30 to 11 a.m. Eastern time on Friday. See, so Friday, 1 hour 30 minutes exactly. Sheesh. And then after that, look, we are stuck there the whole day. All right, this was going on now. This is what we are talking about all the time. And for some TSCW24 traders, day traders, scalpers, speculative area traders, if you are somebody who tend to forget things or who tend to forget important things, my recommendation is that write it on the wall, write it on your fridge, all right? Write it on your computer, all right? Very important. So you do not end up doing things that you're not supposed to do. And also when you are applying, for instance, you are using area wave forecast, area wave services, be aware of those things so you do not. Say you want to show or you want to travel, all right? So you book your travel, you buy your plane ticket, blah, blah, blah. You say, okay, I want to travel today. Now, do you think that all right, the airline company will let the plane take off, all right, if the weather is really, really bad? They won't do that. They will cancel it. So meaning that you can have the airway forecast, the airway service, but you must look at it and see other factors that can affect the market and know exactly what to do. So they will cancel the flight, and you may say, I pay for my flight. You say to me that, okay, departure is at 2 p.m., and now here we are, it's now 8 p.m., and now the flight is canceled. But do you want to get to the final destination in one piece or in 20 pieces? Do you want to travel safely? That's the question. The same thing that we do when we are talking about speculative area will come. All right. So the title of the video is about learn to count waves correctly as a speculative professional area wave trader. So the speculative area wave professional trader will, especially if you are adopting a mindset of a speculative area wave trader, you must pay attention to other speculative area wave traders out there. How are they counting their wave? What's going through their mind? All right. How are they setting their targets? All right. So like here, some traders were thinking of a flat correction. They are the one delaying everybody when the price supposed to turn around here and just go and form the fifth wave. Now, if we don't see our fifth wave today, it's the same people, they delay it. And again, as I said to you before, it's not only, we do know there are market participants are not all area wave traders. All right. So there are people doing other things. So there's another group of traders, especially if you are speculative area wave trader. This is one thing you need to understand. Anytime the momentum oscillators, all right, take it from me. When I'm trading, I pay attention to those crazy traders on the 50-minute time frame. All right. Momentum oscillator, CCI, RSI, stochastic is overbought. They want to sell, especially on the 50-minute. So sometimes, especially during the gap period, they gang on the price and they'll force it down. And then it reaches oversold, they will do it. So there are different groups of those type of traders playing with the momentum oscillator, overbought, oversold. There's one group, very dangerous group on the 50-minute time frame, another group on the 3-minute time frame, and another group on the 1-minute time frame. Those on the 1-minute time frame are playing with the momentum oscillators on the 1-minute time frame. And if you reach the gap period, the activity is well pronounced. But during the best time of day trading and scalping, the professionals usually control them. They shut them down. They are afraid, in fact, because they see it when they try to. Do we have a good example here? Now here, yeah, this is it. You see here. So CCI overbought. Okay, here. You see this section here. I'm on the 1-minute time frame, by the way. Here, you see this section here. So on a 1-minute time frame, the CCI, where are we? Here they push it down a bit. Yeah, they managed to do it a bit here, but the CCI was here. This section here. See this section and this section here. Okay, it was overbought, but the price continued to go up. So when we are in the gap period, those scalpers on 1 minute, 3 minute, and 50-minute time frame will be doing what they like to do, and they play with you. And sometimes there are even trading firms that are doing that. So market becomes quiet, and they know that they can control the price, and so they will be playing this game of ups and downs like this. So that's why we say to day traders and scalpers, and also to speculative area with traders to be aware of those traders. So when you are doing your speculative area with trading, and when it's time for you to buy and you are trading, especially during the gap period, and you know what you are doing and you are controlling the risk and you are really defensive, when the stochastic is overboard, just know that those people are going to jump on it big time and they can create loss for accurate area weight traders. Okay, that's it. So that's it really. So I'm talking to you for 30 minutes. Hopefully we'll wrap it up in the next 15 minutes, meaning that this will be a successful trade. Hopefully. 34. We are now at 67. All right, it's not bad. Okay. So what I'm going to do now, in fact, because we got only 40 minutes left, I'm going to start moving my stop loss, moving my stop loss to secure my gains, all right? So this is my entry here. My stop loss is still here. So I'm going to start securing my gains, all right? Because we don't know what these people will do, and we don't want it to become a losing trade when the market is about to close. So this is something you've got to bear in mind. So I'm moving my stop loss right there at 258, all right? 49. That's 15 pips that are secure profit. So we have now 15 pip profit right now. So if they bring it down here, the trade will be closed, and I'll get my 15 pip, and I will call it a day, all right? Because for the time of the day, and it's Friday, and blah, 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 blah. You see, so those are the things you want. So especially if you are trading during the gap period, you don't want to open many trades. And also, you want to be very defensive, and you don't want to cover, you see. So you miss the best time if you miss the best time for day trading, especially on Friday, 1 hour, 30 minutes, as I show you now, and you want to play it, okay. So you want to trade, you understand, you want to play it. Don't let them, if you lose one, well, I think you should go straight away, all right. If you place a trade and you become a loser, just go. If you want to push it, you have 2 losing trade in a row, just go. So that's it. Otherwise, you're going to be you didn't catch the best portion. Now you come in the last minute only to lose. What's the point of doing that? So you see now they're bringing it back down. If they bring it back here, that will be 15 pips. So you may say, Joy, you could have taken 30 pips, but all right. So this is it really. So now again, we talk about this triangle. There's a triangle here. If the price goes above, you see this one here. The price goes above the triangle right there, okay. Traders, no more chart pattern traders. We project that one up like this, yes or no? So there's another target there. Now, one more thing that is so important that I say to traders. So we are counting wave like you say 1, 2, 3, 4, 5, okay? Now, people will be saying, oh, on Monday, definitely will come down. It may not. Why? Because, as I told you before, the speculative wave count, there is no continuation between one day to the next day. So don't bank on it because of this wave count here. All right? But don't forget also the target level. All right? Don't forget them also. All right? Just remember that there may not be a continuation. One more thing before we go. I was telling you that this is my first wave, this is my second wave, that my third wave is subdivided into 5 minor waves. You see now? So I'm now out of this trade with 15 pips. You see, it turned around here. This is what we are talking about. All right? 15 pips instead of loss. You see, now my stop loss is there. They may come out and hit it, but I'm already out of my trade and I took my 15 pips. Suppose, was my entry here, this was my entry here. So if I did not move my stop loss to secure those 15 pips now. That trade will become a losing trade, can become a losing trade. See, they're bringing it back down. Why? Because look, I'm on a 1 minute time frame, and where is this CCI? CCI is overbought. So we are talking about 159 is overbought, and this what we are talking about. Those are the crazy momentum traders that you must watch. If right from a double top, CCI is overbought. They are selling it down. The same people soon you'll see them. They'll start buying again. Soon you'll see that they'll bring the price up again. They are scalping on the 1 minute time frame big time during the gap period, 3 minute time frame, and the 15-minute time frame. You see them? So those are the things you need to do to secure your gain. All right. So we go back to our 3 minute time frame. What I want you to what I want. Hold up, please. There's time to drink something. Now, what I want to discuss is this. You see, the fifth mana wave of my third wave is from here to here. That fifth mana wave is also subdivided into 5 mana wave. Can you see that? First mana wave, second mana wave. Now, we will put a question mark on this second mana wave of our fifth mana wave of the third wave. Why? Because it got a tail and it come to the starting point of the first wave, which we can say is a violation of the Elliott wave principle. But we are talking about speculative Elliott wave count. So we put a question mark on it, but we know that, all right. Okay? That's what I'm saying. You understand the rule, but you want to use it to make excellent decision. First mana wave, second mana wave, all right, of that fifth mana wave of our third wave. This is the third mana wave, all right, of our fifth mana wave of the third wave, forming 1, 2, 3, fourth mana wave of the fifth mana wave of the third wave, and then the fifth mana wave of the fifth wave, fifth mana wave or the fifth mana wave. Are you getting it now? This is this one here. This is the fifth mana wave of the fifth mana wave of the third wave. So from here to here, that's the fifth mana wave of the third wave. Now from here to here, that's the fifth mana wave of the fifth mana wave of the third wave itself. Our third wave is a complex third wave that is subdivided into 5 mana waves. Not only that, the fifth mana wave of our third wave is also subdivided into 5 mana wave. It's a double extension. All right. So there is a possibility that we may see the same thing here for this fifth mana wave that we are expecting. But remember what I said before. I hope you have not forgotten, because I don't want you to forget that. All right. Especially those that are watching video and you're using the video as a trading signal. Don't do that. All right. Now, because of the time of the day, we may not see that fifth Elliott wave that we have forecast. All right. One more thing. On Monday, the price does not have to continue from here and form that fifth wave that we are expecting. Monday, it may gap down. It may gap up. No continuation between the previous speculative Elliott wave count and the next day. But don't get confused. Sometimes we do count waves on a lower time frame, like 3 minute time frame, when we are talking about the validation of the Elliott wave count. So in that case, there will be a continuation, or there may be a continuation, or there is a high probability that there will be a continuation. Why? Because we are talking about valid Elliott wave count. So we are counting away from the monthly chart, daily chart, hourly time frame, down to the 10-minute time frame. Or we are validating Elliott wave count, all right, from the quarterly chart, weekly chart, 4-hour time frame, 50-minute time frame, 3-minute time frame. If we are doing that and everything connected, 3-minute time frame connected to the 50-minute time frame, 50-minute time frame, to the 4-hour time frame, 4-hour time frame, to the weekly chart, weekly time frame, to the quarterly chart, and we are doing an Elliott wave validation, the wave count on the lower time frame is no more speculative, because everything is done by the book and a validation is in place. In that case, we will not discard our wave count on a lower time frame because it's linked to a higher degree wave count. So the 3 minutes time frame wave count will be connected to the 50-minute time frame wave count. The 50-minute time frame will be connected to the 4-hour time frame. 4-hour time frame will be connected to the weekly chart. Weekly time frame will be connected to the quarterly chart, and everything will add up nicely. So we can start from the lower time frame all the way to the higher time frame. We can start from the higher time frame, validating a wave from the higher time frame down to the lower time frame. So when we are validating the wave from a higher time frame to the lower time frame, we are looking for the internal waves of the higher time frame. So we count the wave first on the monthly chart, okay? Now we drop down to the daily chart to see the internal wave on the daily chart to see whether it's adding up nicely, okay? And then from the daily chart, we drop down again to the hourly time frame, looking for the internal wave of the daily chart on the hourly time frame to connect them and see whether everything is working beautifully, all right? And then again, we go from the hourly time frame, we go to the 10-minute time frame and see if everything is normally. If you are counting wave, this is something I need to mention very fast. If you are doing Elliott wave validation, I need to mention this, a correction. If you are doing Elliott wave validation, we connect the hourly time frame not to the 10-minute time frame, but to the 3-minute time frame. All right. Okay, I don't want the video to be too long. I talked about those things before. All right. We're talking about the ratio 1 to 22. All right. That's what we talked about before, ratio 1 to 22. Now, if you go to check out our webpage about the Elliott wave validation, and also on the home page of 24 Elliott wave, you will see that explanation, ratio 1 to 22, the secret of a valid Elliott wave count. So this is a very important point. When we are validating wave, we do not connect the hourly time frame to the 3-minute. We connect the hourly time frame to the 3-minute time frame, not 10-minute time frame. So some traders will get a little bit confused because when we are talking about a top-down trading method, not Elliott wave validation, we connect the hourly time frame to the 10-minute time frame. This is about different time frame trading method. But when we are performing, okay, Elliott wave validation, what's this? All right, we connect the hourly time frame to the 3-minute time frame instead of the 10-minute time frame. Now that's it. I'm not going to repeat it again because I believe you already understood that, okay? All right, that's it. So the validation, we use the ratio 1 to 22. Therefore, we connect the hourly time frame to the 3-minute time frame. Okay? So where is our fifth wave now? This is what we are talking about. The time of the day. So in 30 minutes, the market will be closed. And if I didn't move that stop loss, we have to wait again or take a loss now. So those are the things you need to pay attention to. Does it mean that our wave count, our Elliott wave forecast was wrong here? No. No, not at all. All right. External factor, the environment or the season. So you sow the good seed, all right? But if you sow it at the wrong time, wrong season, it may not produce. That's what we are talking about. Or you may have something else. So the product that you are sowing should give you better qualities in it, all right? So now, but if you sow it at the wrong place and also wrong season, you may end up having a different type of fruit that you were not expecting. Are you getting the message? So the same thing in the financial market. Sometimes we do not think the same way like the farmers often think. All right, that's it. That's enough for today. It's Friday afternoon. And the time in London is 33 minutes past 8. I will wrap it up. All right, so those are the things you want to bear in mind when you want to perform a speculative Elliott wave count. All right. So this will conclude our discussion today about learn to count wave correctly as a speculative professional Elliott wave trader. As a speculative professional Elliott wave trader, you are using the Elliott wave in a speculative fashion, but you do not want to ignore other speculative Elliott wave traders. All right. Understand that other traders are also speculating, but they are not using the Elliott wave. They are playing with the stochastic overbought and oversold on the lower time frame. Be aware of those traders too. All right, very, very important. If you are applying the speculative Elliott wave count during the gap period, all right, be very defensive, all right, and be ready to take minimum profit and don't let people take your money. All right. Now, using the Elliott wave count as a speculative professional Elliott wave trader, you also understand that there is no continuation between one day and the next day. All right, I explained it before. That's it. Just know that it does not have to be a continuation. There may be, but cannot guarantee. Every day we take it as it comes and we start again at the other speculative Elliott wave count. Like I show you this week. All right. So this day we count where we see a flat correction. Next day we count again speculative wave. We come here, blah blah blah, and again today we do another speculative wave count without paying too much attention to what has happened before. All right. So again, as a speculative professional speculative Elliott wave trader or counting wave like a speculative Elliott wave trader, all right, use price target. Okay, combine normal trading strategies with the wave trading. Don't be the purest Elliott wave trader. Like I show you now, you see how that inverted head and shoulder chart pattern is playing on the mind, okay, of other traders. And they know that. They know that. All right. This is what we are talking about all the time. Okay. So all the target that we say, you can see them here. They are here now. So you can now, on Monday, if you start going up, we are not expecting a continuation, but we are aware of those levels that we have said before. Okay, all the targets are there, and we are watching them. And again, we are looking for a trading sector, and then we go through the trading tree, the sector, the signal, and the low risk entry. Professional speculative professional Elliott wave trader know the difference between Elliott wave validation and the speculative Elliott wave count. So the Elliott wave validation on the lower time frame is a valid wave count that has a link with a higher degree wave counts. But the speculative Elliott wave count does not care about the relationship between the 3-minute time frame and the hourly time frame or hourly time frame and the daily chart. One more thing before we wrap it up, because I've been talking about this week a lot. Everything that I have been doing on the 3-minute time frame, I didn't come on the 3-minute time frame making those decisions like that. All right, it would be stupid to just apply the speculative Elliott wave count without using at least 2 time frames. I talked about this yesterday, and I explained to you that the market pattern will determine the appropriate strategy that one must deploy. You see, the only reason why the price went up today is because of this market pattern. People sold it here. Now it comes to the lower part of the consolidation. They want to push it up. There is a midpoint target. Are we there at the midpoint target? No, not yet. We are approaching it now. Okay, there's a midpoint target somewhere in the zone. Okay, between the green and the pink one. Okay, that's why today a lot of people are a little bit careful. And the ultimate target will be again the top of the consolidation. Because of what we have seen yesterday, we were expecting there is a high chance that those who sold it here will try to come out and a bullish trader will join them and will create a bit of push up. And because of those push up, due to the market pattern that was in place on the 4-hour time frame, all right, we see this gap today, probably gap up, blah, 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 and probably going up to the midpoint and target. Are you getting it now? Now that I'm talking about, I'm connecting the 3-minute time frame to the 4-hour time frame. Now, what I'm doing here is more about, a top-down trading method. All right, top-down trading method. Okay, are you getting it now? So that's it. So in exactly 22 minutes, the market will be closed. So if this video has opened your eyes, it's been useful to you, please let us know by giving us the thumbs up. If you dislike it, please mark it down. All right, I want to know. Dislike it, mark it down. Right? So I know, okay, how many people dislike it, how many people like it. For me, it doesn't matter. I want to know who dislike it, who like it. Okay, please, all right. However, if you say, George, well, I like those videos so much, I don't want to discourage you. All right, feel free to share with traders on the social media. All right, I always appreciate it when traders share our video, and I say to those traders, thank you very much. Subscribe to our YouTube channel. Our YouTube channel is 24 Elliott Waves in plural. Be sure to click on the notification bell so anytime we record a new video, you will be the first person to be notified. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about learn to count waves correctly as a speculative professional in your wave trader. Happy trading to you all, and I will speak to you soon. So what do you need to do now? You go to the weekly chart as soon as the market is closed. You want to pay attention to the weekly candlestick bar, highlight the high, the low, and the median line, ready for next week. Thank you for watching, and I will speak to you soon. Happy trading to you all. Will it form the fifth wave, or will it not? Will there be a continuation? All right. Don't forget other traders. 52 minutes recording. That's a very short tutorial. I was thinking to make it like 10 hours. Okay, next time.